Okay, come on, guys, join me in the panel. Thank you very much, Rob and Ekaterina, for this great organization, the team. I'm really pleased to see your stand here very close to the world elite, and it's great to connect to these guys. And I believe the effort we had in the last, I would say, 10 years is coming in a good direction, I guess. Nevertheless, also, I made some bad experience 8 years ago buying a rig, ASIC rig. I bought it because I wanted to test, because I love gear and I love infrastructure. And then I bought this stuff, and then they said, listen, delivery time 3 months, maybe, yeah, maybe longer. And then I got the message that it will take longer, and then I have seen the price development. And the price development was not going north, it was going south, and that gave me the first frustration, kind of. And then when I received the gear, I had to put it somewhere else because it doesn't make sense to use it. Then I had a very positive experience, the same situation, and they came up and told me, listen, you have 2 options. You buy the new technology, we have new ones, and you can swap, or we send you the money back. And they said, okay, send me the money back, and I got the money. That was a very good experience. So not everybody in that phase was a fraud or were negative. Even it was the times of wild, wild west. And now what I really want to explore with you guys who are with both feet and the whole body in that business, Bitcoin mining business, I want to hear from you. Where are we now? That's my first goal. And the second goal is, why should I invest into this industry? Because there are many arguments against. And I believe, and in our discussion, there are some, we have to look closer to better understand. Before I go into the topic, let me give you the opportunity to present yourself, say some words about you. And I wonder, why are you in that business first? And second, what do you do in this business? These are 2 things. Very short. We also welcome online Golup. I forgot that. I guess he's already there. Hi. Do you hear me? Do you hear us?
Yes, Raul, I can hear you, Reto. Good morning, guys. Thank you.
Okay, let's start with you. Just say some words about you, Golup, please.
Oh yeah, hi Reto, and hi my fellow speakers, and good morning, Mr. Yuan. So happy to have you guys here, and obviously my co-speaker. So I've been mining started mining in 15, and right now I'm not running any mining huge facility because of the government. They stopped it, and bad regulations around the China, around the India, which stopped us eventually from the mining business, and we moved to the Dubai. Right now we are helping people to run their own nodes, how to create the nodes. We actually, build the nodes over the laptop and try to share it amongst the Indians and try to share it amongst here in Dubai as well to a couple of my connections. And we try to educate people about the Bitcoin, try to educate about them why they should run a node and get, highest sense of the freedom. About me, been working since like almost decade now. Started with the mining, then jumped on the Ethereum mining, which didn't work out well for me because it turned out into the proof of stake and I lose whatever I started with it. So yeah, right now I'm purely just preaching Bitcoin, educating Bitcoin, speaking at the Bitcoin events, trying to orange pill people wherever I meet. I guess more Bitcoiner can understand how hard it is to orange pill industry in India, industry in other developing nations where they are going after the huge rewards on the other side of the market, right? So that's what I'm doing, and that's what pretty much about me.
Okay, fantastic. Thank you very much. Maybe you, Vineet, can you add something? You are more from the investor side, I guess.
Sure. Good morning, guys. I'm Vineet. I run Cypher Capital, which is a $100 million fund based out of Dubai. Over 300 plus investments. At last 2-3 projects that have launched on Binance are ours. Next 2-3 are also technically ours. So where does the Bitcoin mining come in? I actually, 5 years back, used to represent the biggest Bitcoin miner in Russia. 5 years back was okay, right? So I sold over 200 megawatts in the Middle East. In fact, the guy who I sold 120 megawatts ended up giving me $10 million and later $100 million to manage the fund. So I basically manage investments for Phoenix Group, Bijan, the founder of Phoenix Group. They are the world's biggest miner with 8% hash rate right now. If you follow Abu Dhabi, there was a $3 billion IPO recently done. That was Phoenix Group IPO. So I've been in mining, always had a positive experience with it. It's just that people don't understand mining. It's again, people think mining as a way of asset building. Mining is more of a cash flow building process. I'll discuss this as we go along. So,
yes, right. Thank you very much. Daniel, please.
Pleasure to meet you and I'm glad to be here. I'm Daniel Jogg, co-founder and CEO of ENERHASH. I came from a different perspective, so I was not a Bitcoin miner. I used to work for an energy company in Switzerland. We did cross-border trading and running power plants in Central Eastern Europe. And at that time, I realized how we could optimize and hedge positions of energy portfolios and power plants against Bitcoin mining. So we started, developing this stuff, and then I established my own company. And then we did the first project to optimize a power plant, power generation for E.ON, the largest utility in Europe, and the first demand-side flexibility project. And then we developed a project in northern Sweden for Vattenfall for balancing the power grid, for example. And then we went to New Zealand. We running at a hydropower plant to optimize the power generation, basically. And now we are focusing more on like flare gas utilization to reduce the emission on oil and gas fields. So what we do in a few words, like we optimize power generation by integrating like Bitcoin mining assets into power portfolios, and we reach like better results on generation.
So when we talk about energy, we definitely have an expert here at the table. Thank you very much. And now Juan Carlos. Juan Carlos just accidentally came. I mean, he was here and we heard, hey, we have to catch him on the panel, and that's great that you joined, Juan Carlos, from El Salvador. Mm-hmm. And it's in the spotlight. I know there are some very, very discreet things going on behind the scenes. That's typically WEF. But maybe if you give him enough chocolate, then maybe he will inform you about the latest developments. Juan Carlos, please.
Thank you for the intro, Reto, and very glad to be here with three brilliant Bitcoiners and our moderators. First off, I'm a Bitcoiner. I'm also Salvadorian. We're Bitcoin country. We've been, I guess, if Bitcoin was a religion, our Mecca is El Salvador. And as a Bitcoiner, I grew up in Canada. I've been involved in the Bitcoin industry. I started in 2014, running nodes, being a miner. I actually still have coins that didn't mine myself, but bought from fellow miners for $60 that I still keep. Kept them for Memento at the time, but now kept them because they're worth a crap load of money. But in the Bitcoin mining industry, it's something that I've run the whole gambit from development, so stack development in the Bitcoin world, and then in the mining side as advisor to Bitcoin mining companies, some of the biggest in the world that I did ask, I'm in non-disclosure agreements with the companies. I did ask if I could mention some of our projects, then I received 3 no's. But as you know, in my country, El Salvador too, very soon, within the next 6 months to a year, you're going to be hearing fantastic projects on Bitcoin mining coming out. But personally, in Bitcoin mining, I'm also the national regulator for digital assets in El Salvador. And the way I see it is that El Salvador married Bitcoin. We're married. So we have to make this marriage work. And it is my approach that in order to make this marriage work, we have to fix the Bitcoin network. And that includes working with the miners. We'll discuss a little bit farther in detail what the real problems in mining are, which is what we're trying to work in El Salvador to fix.
Fantastic. Thank you very much. It's great to have you here with this golden Bitcoin shirt. I noticed that. That's great because you also are connected to physical gold, I learned just minutes ago. Yes. And so if you have real miner expert, then you can ask him also on this side. But Bitcoin, definitely, that's the main topic here. And let me now a little bit elaborate on the different key factors of what Bitcoin mining is. I mean, we know it's the backbone of Bitcoin, basically, the infrastructure part of the Bitcoin. But what are the key elements that make the price and make sense that it works? I mean, we all know this halving event. That means that from this 6.2 Bitcoin that is rewarded will be reduced to 3.1.5 Bitcoin. So that is a massive incident, has a very strong influence on the price, and that's why one element is Bitcoin that is really very strong factor in the mining business. What are the other elements? I know energy is one of the elements. Maybe you can elaborate on that, Daniel. Also, energy is one of the elements, I guess, in this category. Maybe you can elaborate on that.
Okay. You want to start?
No, Daniel.
Okay.
Daniel.
Then I start.
Please.
So yeah, one of the biggest capex is the mining equipment, and then if you start operating, the OPEX cost, like basically operating the equipment, is like 80% is electricity, which you need to pay. So in order to mine Bitcoin, you need to have very cheap electricity and the perfect location for cooling and for a stable operation, internet, basically. So as Bitcoin miners, we are running the Bitcoin network, validating transactions, and that consumes a lot of computing capacity. And by making the calculations, you use a lot of electricity on the chips. So globally, I think the cheapest electricity price is in northern Sweden, US, Kazakhstan, Russia, and that's where most the Bitcoin miners are.
How about El Salvador?
Oh, we got extremely high energy prices, and that's the whole idea about volcano mining, which you guys have heard of. I think let me start off. I don't know how many of you guys are Bitcoin miners here, and me as a Bitcoiner, start off by introducing you why Bitcoin mining exists. Bitcoin works on a principle called proof of work. In order for a Bitcoin to be created, computing power needs to be used to solve an equation. Satoshi Nakamoto, which is the creator of Bitcoin, started by creating this program, this script that creates a reward, has this equation that needs to be solved. The difficulty of the equation is so that one will be solved every 10 minutes. So on average, every 10 minutes, the equation is solved, and it auto-adjusts itself. So depending how much computers are out there, it increases the difficulty of the equation. Now, sometimes it's 9 minutes, sometimes it's 15 minutes, but the average, the program, it's set to release one Bitcoin or to be solved every 10 minutes. Once the equation is solved, then you get what is known as a Bitcoin reward. So new Bitcoins are created, and the computer that solved the equation gets the reward, but also gets the opportunity to inject the information or inscribe the information into the Bitcoin block. And there is transaction fees, so you get paid for that. So Bitcoin mining has two main features. One, you're trying to solve this equation in order to create new Bitcoins. But two, which is now the highest price, is you're trying to submit the information of the Bitcoin transactions into the block. There's usually about 2,800 transactions per block. And depending how quickly you want that transaction, that's how much you get paid. We have something called the mempool, which is ultra saturated. It has over 300,000 transactions waiting to get into a block. And then you have things like ordinals that don't mind paying $100 for a transaction, so they get posted first. So it's a complicated, it becomes complicated, but the vision of it, so Bitcoin miners, to just go into the mining side, is block rewards and transaction fees. That's how you make your money in Bitcoin mining.
Right. Thank you very much. That's very great. Maybe you can add, Golup, you as an ambassador and educator, what are the elements that are pretty hard to explain to people, and what are the key questions coming up when we talk about Bitcoin mining? Is there, can you share your experience on that?
Yes, sure. But first of all, like biggest problem till now was the regulations from the government, like what they think, how government is allowing the people to do the mining. Till now, the power was with the China, as all of you know, and now it's being distributed, right? So that was the biggest problem, to go ahead and tell the an average people or any netizens in the country to run the mining nodes, or to tell them that how they can be benefited by running a node. They can. So this is the first time on the history of human being that you can run your own bank. You can directly throw the transaction on the node by your own self. So this is what actually Bitcoin mining features you. You don't need anyone else over there. You can run your own node at your home, and you can directly transact it within the system. That is the way that we try to explain to people, but still yet there is a huge misunderstanding about the money. There is a huge illiteracy around the money, so people are not ready to understand what the money is, and then how it's how it's possible for them yet to understand that how the shared money or the shared ledger-based money can be. Like the Sir Yuan just said that they are going ahead the volcano mining, and lot many questions are rising from the ETF, or the lot many questions from the ESG community around the Bitcoin mining, the wasting energies. They are not ready to understand that how much money is being used by the banking system, how much energy is being wasted by the central banking, and whatever the facility we have today to use the money as an individual. Instead of that, like Bitcoin mining could solve all of that just by using less than 1%, or by using the renewable resources like the great LS order nation is doing, right? We all are proud about that. I'm so happy to see the Mr. Regulator speaking about it, about the volcano energy, how they are not going to do ahead with the 241 megawatt energy by resourcing it out from the great nature energies, like renewable sources like wind, solar, or the volcano itself, like how they come up with that. So yeah, there is a huge problem, Rolf, I must say. But yeah, we'll go ahead, and eventually everyone will run their own node to going ahead to make their own bank, and that's what's coming up. That's what's coming up very soon.
Excellent. Thank you very much. Now it's, I think we should be now a little bit in the topic. We know a little bit about the structure, about key elements. One of the biggest issues will be the price development of the Bitcoin. And I wanted to ask you, and maybe you can add what's your perspective on that. The price of the Bitcoin is up now, and we're coming out from quite painful years where the price was low, and this created the situation that some went belly up. Maybe you can elaborate on that a little bit. What happened last year, now what's going on now?
So answering this question actually is tied up with one of the questions, the one that you asked something. So, people always think that electricity is the key component of Bitcoin mining, which is true, You need to have an all-in cost below a certain price. But what you also need to understand is that Bitcoin miners, the devices that you buy, are tied up with Bitcoin prices. What it means is when BTC was at $60,000 last season, these Bitcoin miners were selling at $20,000 a piece. So you have to understand, you need to buy these miners when the miners are. It's not like you are going home and buying an air conditioning for your house that the price is fixed at 2,000. Because this is a production unit, the cost of a Bitcoin miner is always 11 months of your profitability. So there's a website known as ASIC Miner Value, which you guys can open it up. And you can look at what is the profitability you will get at a certain electricity price. If you get 4 cents electricity, old generation miners are profitable, 4 cents all-in price. And you would understand that you need to buy these miners at this price. Now, when the question comes that, what about the Bitcoin prices? Suppose Bitcoin goes to $200,000, the miner that you can get for $500 right now would be selling for $10,000 then. So the whole game here is, you need to enter when Bitcoin miner prices are low, and at any given time. Today if you buy a miner, the average profitability on miners is anywhere from 3 to 5%. the magic gains happen when BTC price goes up, because your BTC production sort of remains same, keeping difficulty in mind, while your electricity prices never change. So the net profitability comes up. So, and now coming to the prices,
Maybe repeat the page. What's the name of the page so that we can?
You actually go to a site known as ASIC miner value. When you go to the main page, I was showing when you go to the main page, you have all the miners and the profitability of those miners at any given rate. So basically, this is calculating this profitability or loss at electricity price of the electricity prices down there. So at 5 cents currently, and all the miners are there. What is the profitability? You can check.
Fantastic.
So the first rule is to buy the miners cheap. The second rule is to get all-in costs, not just electricity costs. Like when you go to US, so understand mining. When people were saying BTC is going to $8,000, they don't understand the dynamics, because 60% mining is in, this is 2 years back statistics, is in US, 15% was in Kazakhstan, Russia had 15%. Now, all these places average electricity prices 6.5 cents. Go to the same website and look at the profitability. You cannot go below a certain threshold that is around, at the moment, $22,000. If you go below that, miners will switch off and there will be no network. So firstly, and now about the prices, I think the prices, if you understand what Bitcoin brings to the world, you understand that there is a use case. It is becoming an asset class where, people in Latin America and Africa don't trust their currencies to store value. They believe in Bitcoin. Again, yes, you don't look at Bitcoin. Like you said, you bought miners and 6 months later, Bitcoin fell down. You should not look at an asset as a speculator. You should look at it as an investor. In 4 years, BTC has gone from $12,000 to whatever it is, $45,000. While people who land up in this industry look at a 2-year horizon where it's gone down from 65 to 45. So what is on a long-term basis, it will grow up.
What means long-term for you? 5 years?
Okay. If I give you numbers, I don't do random.
No, so just long-term, is it 5 years, 3 years, or 10 years?
Okay, long-term for me, by 2025 end, I have a bet with a lot of people, actual bets, that BTC should, depending on what is the halving day price, would land up anywhere from 140 to 180K. BTC. Yep. Reason is, there's a reason for it.
I mean, it is important to talk about the life cycle of Bitcoin, which is related to the halving. So in Bitcoin, we look at it in a 4-year cycle, because the stuff that I talked about, the reward, which is coming up in April, gets halved every 4 years. The beauty of Bitcoin, I don't know how many of you know this, there's only going to be ever 21 million Bitcoin, which is a fixed supply, increased demand, and brilliantly done. That's why my cousin, whoever he is, Satoshi Nakamoto, I have love for him, created a scarcity by every 4 years, the supply increases. So if we look at a 4-year cycle, if you look at the closing, if you look at Bitcoin as a 4-year cycle, it's only been around for 4 cycles. If you look at the closing, it went from 0 to 100 to 500 to 67,000, and now to whatever it will be after this halving, which I agree with Vineet, I wouldn't. I've been there since it was $60. I wouldn't be surprised if we're over 100,000.
So if you guys look, I run by numbers. So in 2017, when BTC went to an all-time high, it was in a December. That was 19,000. The last high was at 2021, which was again in a November. So what I'm trying to say is, what he's saying is it's 4-year cycles. The peak always comes somewhere in that November, December timeframe. You can go at charts and look at it. So that's why they predict that. A lot of people are saying 2024 and you will see crazy numbers. No, it's not going to happen then. Normally, if numbers are right, it's happening in 2025. What you also have to understand is season 1, the market cap of crypto was 600 billion. It went to 3 trillion. That was the 3.81x. If next season is under 3 trillion, we all should close down crypto, go and sell pizzas. It's going to go above it. So what is the numbers? 5 to 8 trillion. 5 trillion, 50% BTC dominance, 2.5 trillion. Look at numbers where BTC can reach. Again, let's not go into price speculation. Let's see the value that it brings in. We are very early in crypto. Kathy Woods is not wrong in saying they will see $1 million Bitcoin, because still less than 1% people are really understanding what crypto is. 400 million wallets, one wallet, 1% means 4% population. 90% are speculators here. They've never used crypto for lending, borrowing, KYC. any shit like that. Sorry for my French. So, it's too less. It's just 1% of the population. The day this becomes 15% and people start storing value, start doing transactions in USDT in Zimbabwe, in Latin America, crypto will be up there, and that's where...
Yeah, you mentioned a very important point. I mean, it's 15 years old we are in that, and that's a teeny age. And never forget that, because we are still on a road. We have a teeny, but we see now evolving, and now I believe it's much easier to anticipate the development, I would assume, since also adoption is visible. And maybe let's look at this point, the next question. When we talk about adoption, you mentioned some countries. You have not to convince about the value proposition of Bitcoin. They know it exactly, given the inflation. But when you go back to the Bitcoin miner, they're also spread in different countries. We see energy is one of the key elements, but you said some others important. The environment is important. Could you elaborate on that, maybe, Daniel?
So yeah, that's also like a topic in ESG, because there is also a huge pressure on Bitcoin. Like, is it like sustainable? What are the mix of electricity? Because it's also a problem. Okay, it's using a lot of electricity globally. So it's roughly around 140 terawatt hour yearly base. Just to put it into perspective, it's like 2 times more than Switzerland's electricity consumption. And that's a huge amount of electricity. But anything else is using a lot of electricity. Mining gold, using a lot of diesel, petrol, gaming, anything, watching Netflix, but you are not, burning Netflix because, it's using a lot of electricity and I don't want to watch anymore. So people need to adapt into a system which is using electricity, because it's, people accept it. But when they are using a lot of electricity, there are also different ways to use electricity. So these modular systems, because one Bitcoin miner is pretty small. You can operate it in your garage, or you can operate it in large industrial location, warehouses, or you can put it into mobile containers, basically, and put it next to power plants directly. So when we go into a different direction on sustainability and energy efficiency, there are certain ways you can do it. There are mega mines, let's say, like 700, 1,000 megawatt, huge operations in Texas. That's kind of centralization of mining, which I don't support, because they're just absorbing a huge amount of electricity from the grid. And there are,
What is the motivation of Texas, for instance, they offer very cheap prices. That's one thing.
Actually, yeah, Texas is kind of cheap, but not the cheap that people are claiming, because it's also like electricity index price.
Is there,
Kazakhstan is also cheap, but became more, expensive, regulated, and people were claiming like Bitcoin miners were paying too less for electricity, so they increased the price. So in Texas as well, the mix of electricity, for example, is 60% coal and gas, and the rest is like solar and wind. But when there are times are like not so sunny and not so much wind is blowing, it's basically gas and coal on the whole location. So when we are talking about thousands of megawatts running on mining, I don't claim it's sustainable. I don't say it's nice in the system. Right now, the system is kind of sustainable, stands around 50%, which comes from renewables, hydro, and then the rest is like a mixture of like gas and coal. And what I think is we can move this system. There are a lot of wasted energy in the world. So I come from an energy background, and I saw how many times we cannot operate the power plant because the power market is not good. There are a lot of wasted electricity because we cannot schedule the power plants for renewables, solar and wind. So there is basically wasted electricity worth around 200 billion euros.
Okay, let's come to that later. I want to have a little bit an overview, because one of the promises of Bitcoin is decentralization. And in earlier days, about 8-9 years ago, when I was invested in that, there was a situation that the majority of the miners were in China. I believe this is not the case anymore. If you look at the geographical distribution, is anybody able to give a little bit a number on that? Can we say it's truly decentralized if you look at the location, or is that still the same? What do you?
I wouldn't say that it is. Again, it's still with the Chinese in the US, so it's technically because the Chinese miners moved their devices to the US. So again, it's becoming highly institutional in nature. When I was with BitRiver, this was the biggest Russian mining facility that time. SoftBank invested, I've seen the miners, they invested close to $75 million in miners. So there are institutional players coming in, like Phoenix Group, whose money I manage, have built up a $2 billion plant in Abu Dhabi. You can Google it up. They bought $650 million of miners, and then Marathon bought $800 million of miners. So again, it's not super condensed, but it is getting more and more centralized. It's like, VCs in crypto invest in business, They say that, it has to be decentralized. People have to be investing all across, but then SoftBank ends up becoming the big guy in internet. So
I see. Maybe Golub, on your side?
Yeah, sure. Yeah, Reto, there is a lot many core Bitcoiner who believes that one Bitcoin is one Bitcoin, and eventually this decentralization is going to work out, right? People are working behind that, like as you have seen with the Stratum V2, you might have seen with the Ocean Mining, which is being led by the Jack Dorsey. The good people, the right people, are actually investing a money and investing a time behind the developer who can actually help the mining to be more decentralized. So the solo miner, they themselves can connect them and create a one pool. The Ocean Mining also facilitates you to go over this big mining pool and get you a direct profit or direct transactions within your personal wallet, rather than go ahead and giving it to the bigger pool. So there is lot many solutions coming out, and eventually the core Bitcoiner who's over running the solo mining is going to get larger and larger rather than this individual. Yeah, they are running a business. We live in a capitalist world, so definitely they are not going to harm the one core fundamental of the Bitcoin, because they are here and they are pouring a money, so they are not going to lose any essence of it. So eventually, I do believe that we will have more decentralized. I'm not denying the fact that it is getting more centralized with a bigger mining pool, but with time, we will see the larger solutions coming out from the core developers or the core Bitcoin team. Yeah.
Reto.
Yes.
So,
Juan Carlos.
a couple of things. As a Bitcoiner, please, this is not a crypto conversation. This is a Bitcoin.
Right.
We differentiate to death. And my friend online knows this because we're Salvadorians, and that is our national currency. It's like someone talk about the Swiss franc and calling it euro, you'll be like, what are you talking about? We're Salvadorians, Bitcoin is our national currency. Now, the conversation that we're having is a bit confusing, because when we talk about decentralization, Bitcoin is completely decentralized as a coin. Ethereum is owned by Vitalik. You guys can argue whatever you want on it, but if he says, I'm going to change this now, and it's completely changed. Bitcoin will not be changed. The code that we have that was created by Satoshi Nakamoto will not be changed. Now, when you guys are talking about mining power centralization, which is what he fears or what they're talking about, that doesn't scare me at all, because two things can happen. When it comes to the Bitcoin network, as I said, the miners do the proof of work. The fear is that if you own more than 51% of all miners, you can do an attack, and that means you can make changes to one transaction that would be authorized, but just to one transaction that would be authorized, that might be approved, but the amount of collusion that needs to take place of multi-billion-dollar players to achieve this will not happen. On top of that, so centralization to me doesn't bother me at all. Of mining power, it's a moot point. Doesn't affect us at all. Secondly, even if that was the case, and we already went through this, Bitcoin went through something that we call the block size wars. There's a book about it, and it was the whole fight about changing the protocol, because the problem, Bitcoin has a lot of problems, and this is why when I initially presented the idea of why I'm here, is because my country is married to Bitcoin, and I'm the lawyer trying to save the marriage. So I work in trying to make sure that Bitcoin will survive, will thrive, and will be able to do business in Bitcoin. So centralization, something completely different. Bitcoin is completely decentralized. That means that there is not one single authority that can take your Bitcoins away, that can seize your money, that can change the network, that can change the rules. That doesn't exist. That's centralization. That's what Ethereum and a lot of the other coins have, centralized. So that's, but when it comes to the Bitcoin mining, the centralization doesn't bother me at all.
Thank you very much for this contribution. I also feel a little bit as it's a bit artificial, the whole discussion about decentralization, etc. And very often the market regulates it very much himself, and we have a kind of a natural approach of that. And we have seen theoretically it would have been possible many times already, theoretically, to have this 51% event to execute, but nobody's interested at all to destroy everything.
The only fear of 51%, if you actually get collusion, you could actually have a fork, and that means that a group can decide, look, we're gonna fork it, but then you have to decide whether you stake your Bitcoins to that fork or not. So no, Bitcoin is established enough. It is a stable currency.
Vineet, you're smiling.
I have a scary thought for everyone. This is very controversial and scary, but better I present it. Guys, anyone knows who David Chaum is? David Chaum, if you Google him up, David Chaum is the guy who built e-money. He's basically considered the father of cryptography. Digital assets are built on his technology. You can Google it up. I was at Satoshi Roundtable last year with him, and I had 2 questions for him. This is very controversial. Just take it as you like it. I said, question number 1, they say that someday quantum computing will come and it can break Bitcoin. Is it possible? And second, if it's possible, when will it happen? These were his views. You can see who he is. He's the guy on which this digital asset is built. He's considered father of cryptography, old guy. He says in the World War, there was this coding device known as Enigma. And they said no one can break it. It got broken, just that when 3 key people in the world, the president of the US and decide that they need to break something, it gets broken. And it was broken, just that they didn't tell the people. Now, what I'm trying to tell people over here is, as a fund manager, my job is to make money. I believe in Bitcoin. I believe there is use case, but it's also about risk diversification. You made your $100 million in Bitcoin. Please buy $50 million of gold. Please buy $20 million of assets. Yes, it's good to believe in everything, but also have an amazing risk. This is a highly controversial one. Don't get scared with it. But I have a quick question from everyone, because everyone's. How many of you have actually bought Bitcoin? Yes. Okay, good. So you see, in a crypto conference, we have like 70 or 60% who have bought it. How many have you, other than trading, how many of you have actually used Bitcoin to do something, lending, borrowing, buy a house? Look around, guys, look around. So we are gone down to less than 10-15%.
That's quite.
That's good.
Imagine in real world how small these percentages are. Imagine whether we haven't even started yet.
Look, I don't want to monopolize this, and I know you and I can probably get in a 3-hour discussion on this. But let me clarify something. Breaking the hash, and that is the encryption behind Bitcoin, does not negate the network. What that does is, so once again, part of the Bitcoin education. And in El Salvador, kids as 3 years old are educated in Bitcoin. We have shout out to my good friend John, who runs Mi Primer Bitcoin, which is an educational institution that now is integrated into every grade school program in El Salvador. So every child knows and gets to learn about Bitcoin. So our country has fully adopted Bitcoin, and it is taught in school. It's taught in the elder homes when they get bored and they got no one to talk to. We send in a Bitcoiner to go and orange pill, and we call him. And so we have Bitcoiners in El Salvador evangelizing everyone. One of the important things about Bitcoin is that the solution, what it did is it removed the trust. It's a trust layer. I don't have to know you, and I don't have to trust you to make sure that this money is actually getting to me. It is the blockchain that is ensuring that money is getting to me. Now, the encryption aspect just allows it to be anonymous. That's it. So if it's no longer anonymous, the blockchain will not be compromised. The transactions will still be there. Nothing will change. It's just that they'll know that I own Bitcoin. So now, not that I own Bitcoin outside my countries, but you know, they won't be as anonymous as it is. That's the only thing. So yeah, your buddy might be right about saying, yeah, hash 256 can be broken by quantum computers, but that is not the end of the world when it comes to Bitcoin. However, I agree with you, diversify.
Yeah, everyone needs to diversify. You know, believe in something, but don't be a fanatic behind it.
Okay, great. Thank you very much. I mean, I wanted to come up with the question because you see everywhere AI, and is AI relevant to the Bitcoin mining industry? Probably yes, to certain. We will see. We will see. Or do you see something, territories where you definitely think there will be an implication in terms of innovation, for instance? Daniel, I don't know if you have an answer on that.
Yeah, we don't use AI for like optimizing or doing something because that's just an algorithm. I could call it AI, but that would be bullshit.
Yeah.
But the other thing, like how AI is operated, it's running on high performance computing.
Yeah.
So all over the world, there are a lot of computers, data centers accounting for 2% of the global power consumption. So these running on like a lot of electricity as well, these operations, AI, modeling, engineering, and science calculations, weather prediction. So all the Bitcoin miners have very cheap electricity sources, infrastructure already developed.
Or maybe parents who pay it, and you have it for free.
and so kind of, let's say, infrastructure is already there. So also, I see more Bitcoin miners diversifying into high-performance computing because it's a different source of revenue because you can sell your science calculations. That's what we did for 1 year, like modeling, like for a medicine company, for example, like calculations for making proteins. So that's kind of paying even like 10 times more than Bitcoin mining, but also the different infrastructure, different operational problems. But that's, in our perspective, it's how we use, for example, AI and utilize it.
Thank you very much. I thought about now we see in the Bitcoin space this move from Wall Street. What is Wall Street saying also for the Bitcoin miner industry? Are there signals there? I just heard that some big companies invest, at least last year I have seen that. Is that a trend that big companies go also into Bitcoin mining, or is that just an illusion? Can you say something about that?
Again, big companies actually have been getting into mining.
Right.
If you look at the news,
Bitcoin mining.
Yes, Bitcoin mining. So Aramco had put up a facility, and it's on the news actually, you can see it. I remember SoftBank had this huge number of miners that were bought in. But my only problem with these big institutions is they always put money when the hype is there. So as soon as BTC goes to $100,000, they'll buy the same miners that, the kids working there as an analyst will say Bitcoin mining is amazing, let's buy in. They'll buy these miners at $30,000 and then Bitcoin will retrace and they will get burnt out and they'll think that Bitcoin mining doesn't work. So point is, yes, big companies are getting in. There are people who understand mining and there are kids who just join in and find the hype. So
absolutely,
I think they're coming up.
I would also add something like a lot of utility and government contacted us in the past few years. I used to work for, I don't know if I can tell, but but yeah, I'm not mentioning governments, but I can tell a few huge companies. For example, Repsol contacted us, also Oku Energy, PDO from Oman. We work for Qatar, and kind of like big companies getting into it. We worked with E.ON, the third largest utility company. They wanted to do it, but the decision-making matrix in a huge electricity company is like so long anyway that making a decision on investment something is like 14 months minimum. And when you put it into the Bitcoin world, that's like 2 years. I mean, so many things changing in 2 years in Bitcoin mining and these things, they cannot make a decision. So it's like impossible.
A quick question. Did you see these requests coming when BTC was at 60,000 or at 80,000?
I see every time the price going up from all over the world. So they were all coming in when the hype was there, they were coming, but they didn't want to do the mining themselves. So they are like, how we can get into this, how I can help them to get into this, because they understood we are more like energy focused, and they're like, how can I help them? And now we have like kind of a good setup for them. But
all vanished at 18,000, right?
Actually not, but it changed because the electricity prices changed as well. So we had an energy crisis in Europe, and then it was a hype in electricity as well. So it was like going up, so they were not really keen. I saw more requests on our platform or like on our website and from energy companies when they are facing again negative electricity prices. So the more renewables now we have in Europe, we are facing negative prices on daily basis from 12 to 6 p.m. when sun is shining. So then I see when the negative prices kicking in or in locations and different problems kicking in, they come and contact. And the latest news was last week, for example, January 12, Biden announced that they are going to put penalty on burning flare gas on oil and gas operations, $900 per ton. So then immediately oil and gas companies started to write us, which we have been in contact with obviously before, and they like, guys, we need to act immediately because until 2030 we must stop flaring in our locations, otherwise we are facing penalties from this year, so we are going to pay penalties. And instead of flaring the gas, that's wasted energy, we can convert it into power by power generation and use it for off-grid like Bitcoin mining sites. So I see that there is a big trend, but these energy companies are making really, slow decisions. So we need to we need to provide them a really good setup in order to get into this game on big.
This sounds like a development triggered by regulation, that you can really embark on that. When you talk about innovation in that industry, I mean, one part of innovation is a technical innovation. That's one thing. Is there something coming along? Another part is the business model innovation or the partnerships that new evolving. Can you elaborate on that? What you see right now?
Let me touch on your previous questions about AI. So AI has been used, but you got to remember, as I said, we run the Bitcoin code, doesn't change. You can't implement AI on it. To the code specifically. However, you run what we would call AI. If you're doing managing electricity, you got to have quick algorithms to be able to switch off, reduce your electricity costs, manage. But it is sort of provider to Bitcoin, the electricity, the grid manipulators. But there's other, and there's a company I can mention that we're working with in El Salvador, which is Liquid. It's a Lightning financing pool for the Lightning Network in Bitcoin. And they actually have incorporated an AI algorithm that keeps track of where the Lightning transactions, and Lightning transactions is what we call a layer 2. It's too expensive to do transactions on layer 1. We had a layer 1, 2 discussion here yesterday, but layer 1 is a transaction on the Bitcoin network itself on chain. This is where you make the transaction, it goes onto the memory pool. Eventually tomorrow, next week or sometime, it gets, depending how much you're willing to pay for the transaction, it gets into a block, which it gets transacted. That takes too long, so we created what's known as layer 2s, solutions that can create an instant transaction. So this is more like crypto a little bit, but the layer 2s Lightning Network uses AI. And so they're in the layer 2, there is integration of artificial intelligence for improvements on the network. But Bitcoin mining and the Bitcoin code itself will not change, so you can't really gain any benefits from having AI into it.
So the core mechanics and the core will not change, basically.
Will not change.
Okay, so
Reto, I would like to address a couple of things as we've been talking about, right? The number one is, as we've been saying about the past and the history of the Bitcoin and how the quantum and the AI can actually, destroy the Bitcoin or the network. They can hack it. That all thing comes when you say that, okay, SSD256 could be hacked, right? With the quantum, with the more power. Now let's say like what is the power of the current quantum computer? It's nothing. It's like 80 petahash. What is the current power of the Bitcoin mining network? That goes about like millions of petahash. Okay, let's say that tomorrow we find some supercomputer like Satoshi mentioned, right? That some some out of novel technology comes in and could break the Bitcoin. If even that possible, we can upgrade the algorithm to SHA-512 to SHA-1024. We can make it more secure, right? Now, once somebody disturb the finality and change the Bitcoin or change the algorithm, we can fork to the last block and we can still run the Bitcoin network. So there is no question about hacking it. There is no question about changing it. About the history, like my friend Vineet said, that definitely it could be changed by the Wayne and David Choon's B-Money. So before the B-Money, there was a proof of work protocol came out with the Adam Back, right? With the Halfpenny who worked on the proof of work, like the Mr. Regulator said here about the liquid, which is again being developed by the Adam Back, right? Those people proved something after using that tag. David and Mr. Wei converted it into the B money. Somebody converted it into the B gold. Somebody made some other hash protocols. There was 40 years of history behind the Bitcoin before we got the Bitcoin. It didn't came out in 2008. It is not a 15 years baby asset. Yeah, if you consider it in the terms of the fiat, then it's a 15 years old. Otherwise, it's completely not. So that's about the AI and definitely on the compound, the attack of the quantum computer. Yes, we can fight it. On the longer run, when the countries adopt it, like El Salvador, let's say London and New York, the population, 20 million population, adopt it, the government will come forward, they will start treasuring the Bitcoin, like they treasure the gold today, right? And then they will save the network, which is supporting the millions of people around the world. They will support it, they will help it. So who will be incentivized by doing such hack? No one. Who will be incentivized by break the Bitcoin? No one. There will be the government, there will be the private institutions who is pouring a lot of capital behind it. They will try to save it. So that's the one thing. And on the last part about the AI, yeah, Peter Thiel and a lot many companies being using AI since the 10 years. Whatever we are seeing is just a LLM, like Mr. Regulator said, that yeah, we can use it for the, lower down the cost. We can use it for some kind of calculation over there.
Yes.
Yeah, you can do that. But again, it's a Peter Thiel's baby over there. They're using it since 10 years. We just got the LLM for the users, right? Bigger companies being using this kind of, yeah. Sure.
Thank you very much. The LLM part definitely is discussed the whole week. You can go to the AI house. It's massive. It's just massive. I hope they can really apply it in practice, because you also need some computer power to do that, and that's where I'm invested in AI Cloud. That helps to generate these MML models in a much smarter way. Nevertheless, let's go to the final question round. If I'm really interested to invest into the Bitcoin mining, I mean, the easiest way is to have your Bitcoin, that's clear. But shares is maybe something, or are other things that are associated to the industry that maybe give a leverage. I mean, if we would put a basket where you invest, diversification is your talk, how would that basket look like? I mean, you have this Bitcoin, it's like comparable to gold. You can invest in the shovel rather than in the gold itself. And I think it's a smart idea. Do you see some players that might be of interest when you are looking for exposure into Bitcoin mining business? Do you see some players, characterize them, that might be exposed to an extent that you really can say that's an exposure into Bitcoin mining? Maybe Vineet.
So for me, I like control. So again, one question when he mentioned that, the best ways to buy Bitcoin. Buying Bitcoin and mining Bitcoin are not the same thing. When you buy a house, you buy an asset. When you buy 10 houses because you will make money from rent, it's building a cash flow. Bitcoin mining is cash flow. Buying Bitcoin is an asset. So you buy 10 Bitcoin, it will be worth $10 billion, but it doesn't give you cash flow. So someday when you have to run your house, you have to sell it. While when you buy miners, they will give you 5% a month, and then you can run your house from it. When it comes to me, I would, so I have this strategy on investments. I think of, this is how I think is the perfect, personally for me is perfect. Metaverse assets, that means buy Bitcoin, Ethereum, or whatever tokens we are talking about. This is your wealth. Move on to metaverse cash flow, mining, staking, whatever. Real world assets, buy houses or whatever, gold or whatever, and real world cash flow. Once you have this whole 4 cycle, whether the market goes up, down, left, right, Bitcoin crashes, world crashes, you still survive. So if you are stuck in any one of them, if you think, no, I'll buy 100 BTC and I'll survive my life, foolish. Get all these 4 parameters. Metaverse assets, metaverse cash flow, real world assets, real world cash flow. Nothing in the world can shake you. That's how I think.
That's great. That's great. Daniel? Also, I would invest in your company, of course, but it's not possible anymore. Also,
So kind of, yeah. We have a fundraising pretty soon because we didn't have fundraising, but we self-funded our projects and financed up our projects. So we were like investing ourselves. So there are certain ways you can get exposure. You can buy a miner equipment yourself and operate somewhere. That's a huge risk. I would not recommend to do it for anyone, as you got burnt as well in Serbia.
Are there specific gears and stuff you need?
So it's more becoming like a bigger game. So the high entry market barrier is around like 1-2 million to start with, I would say. So if you want to do yourself, prepare like 2 million at least just to start yourself. So after that, there are stocks listed on Dubai exchange, for example, your company, or like on Nasdaq, and there are still stocks which are not listed yet. So we have also like a green Bitcoin mining company, for example, which we are intend to list on the stock exchange in Hungary. But it's like, it's not a huge market. It's more about regulation, because people want to get into more regulated stocks and how they can get exposure into Bitcoin mining, like in Hungary. It's not a big deal, but it's still good. But on a level like I'm having a fundraising soon, so it's like.
Okay. So Bitcoin mining specifically, I mean, I like lots of companies that are properly managed, that are financially responsible. The returns right now, the Bitcoin miners in the past month have taken punishment. As you know, the stocks have taken a beating. I personally have made a substantial amount of money just playing around with the stocks, and I do have long-term stocks. I think personally, and I like your vision, with the 4 sectors. The Bitcoin mining world is evolving, and same thing with the technology is evolving, it's formalizing, and it's starting to evolve from just running as a regular company. One of the things that I'm looking for, it's coming up within the next year, I hope, and it's one of the companies that I probably can't mention, but they're working in creating a hash rate token. That means that you're no longer investing in the Bitcoin mining itself. I don't care how you manage. I don't care what you're doing for marketing. I am buying directly hash rate based through a token of the hash rate you produce. And I would get rewards on my token based on your Bitcoin mining rewards. So those are things that big companies are talking about, and they'll be coming out in the future. But I would rather invest, and I'm saving a little pool of money to invest in those specifically projects when it comes to Bitcoin mining, because it's, when you invest in a company, you never know how it's properly managed. You never know where the money's really going and how much of that is actually going directly to buy new equipment, to increase the hash rate, to keep updating, pay electricity and everything else. So that's sort of what I'm looking at.
There were 2 tokens which were launched on the hash rate, BTCST, which was launched on Binance, and GMT token, Go Mining token. So there are 2 tokens which exist on those hash rate. One token is equal to 1 terahash of hash power.
And one thing I would add quickly, if you are investing in stocks, check the results, financial results of these companies first, and check their power costs and PDFs which they are presenting, because you will learn from this a lot.
Okay, do we have 5 minutes for just a round for the microphone? Is there a microphone?
We missed the last one from the online speaker.
Yeah, sure. Vineet and Mr. Reto, I would like to say that everyone that just run a one node. Okay, don't go behind investing into the lot of things. Yeah, obviously, if you are managing capital, you should go behind the mining operations. You should go behind the mining stock. As an individual, just run a one node.
This is the war machine. This is not some other asset where you try to make a money. This one will give you the freedom against the CBDC, against the digital ID, against the traveling passport ban, everything you are going to get with the social credit. That's why you should run a Bitcoin node, not to make a money on the other side. Yeah, eventually people will understand it on the longer run. That's what I believe. And yeah, best of luck to everyone. And there is no second best on any side on any token. Just buy and hold the Bitcoin. That's all you can do. Self-custody it. Do not go over any exchange, any other provider. Try to keep it, hold it with you. I get a tungsten, back up on a tungsten, and just to be happy about it. Let's save the world with a Bitcoin instead of making one more asset class and one more opportunity to cost on the opportunity to make money. Yeah. Thank you, guys. Thank you so much. Happy to see you.
Sure, sure. Okay, let's open up for some questions. Please wait until the microphone is there and then ask your question, please. Thank you. You are Mr.
My name is Gennady. I'm an investor. Thank you very much for discussion. Very interesting. I have several questions. The first one, there are miners who mine individually in their garage, but there are several big mining pools. And I understand that these mining pools, there are like 4, 5, 6 of them who actually control more than 50% of hash power. The question is technically, purely technical question. Who actually makes a decision on this potential 51% attack? Is it up to the management of these 5, 6 pools, or actually separate miners who are part of this pool can prevent this? Purely technical question.
It was at the last taproot when they decided, and I don't remember how it went through, but they didn't ask us for sure. So it's like not the individuals for sure who.
If you're part of a mining pool, someone owns,
so
someone manages your.
And they are managing the pool, so they are making the decision, I think, above us. But if you are not agreeing with their decision, so you can quickly change the pool. So it's like a very quick decision on our side. So it's like more like a democracy style. So if we don't like the decision of the pool, we can quickly change like one day. No, not even one day, 10 minutes. So it's like it's gone. So it's like they actually, the pool sent a questionnaire to us, to everybody, to because we have like multiple pools, and there was via BTC, for example, they sent a questionnaire.
Was the questionnaire you ask about 51%?
No, if we agree on the taproot upgrade, yeah.
So is the answer, it depends?
No, it's like, yes.
They run it. They don't.
No, it doesn't depend on, because the big pool being consists of the smaller miner. So whenever there's any change or any update, they have to be, accept the update. Otherwise, they can change it. Like you can join the Stratum V2 and create your own pool, so all the other solo miner will join you. So no, it's not directly depend on the bigger pool. It depends on the whosoever join the pools.
Are you happy with the answer?
Oh, yeah, thank you very much.
Thank you very much.
And the second question, if I understand correctly, miners receive remuneration like 2 portions. First portion, this is Bitcoins that are created when the blockchain transaction is completed. And the second is a gas fee that is paid by people, right, who make transaction. And we have, every 4 years, we have halving. So this part, the first part is going down all the time. The second part is still a very, very tiny portion out of the total remuneration, and it's not going up. It's not going up, but not
anymore.
It's like compensating. It's not compensating.
It's going to be more than...
Yeah, so this is the question to you. Do you believe that this second portion will actually compensate for all these reductions because of halving? And if yes, because of what? Because of increased number of transactions, or what? Thank you.
So, do you believe, have you, Bitcoin network someday can replace something like a Visa network? Visa has computers which check transactions all across the world. First of all, there's this, your data point is wrong. The number of, the amount of money people are making from transactions has gone up because Bitcoin has started doing ordinals, which is basically these NFTs and all this stuff, which has led to a lot of transaction fees coming in. Though Bitcoin maxis don't like this concept, but there is transaction fees which is on the rise. In 2030 and ahead, when world's 15% population believes in Bitcoin, I think the transaction fee will overtake new mining. So that's what the adoption curve looks like. When people believe it in and people are transacting for it, transaction fee will be much higher than what it is today, and it will overtake the other rewards.
Yeah, actually, in the past 2 months, basically, when the ETF was launching and the transactions were like really high and people were, active on the network, let's say, they were buying Bitcoin price was going up. It reached, so we received 6.25 and then it added up around 3.5 on average for a month, for example, on the transactions. So it's like adding up, and if they are halving down next time to 3, so we will go back to 6 if we keep up, the transactions, for example, which is going on the market. So if the market price goes up, for example, let's say, I truly believe it goes to like 100. Last year, we also made a bet at the Christmas party how much is going to be next year. I said 45. It was 45 the next Christmas party. So let's say it's 150, and maybe in 25, we will see how the stock to flow model follows up. But the transaction fees must go up actually in order to survive. So when we check the financial results of, as I mentioned, of larger operations, they were making like hundreds of millions net loss in the past 2 years. And if you halve down even more now, the revenue and the operational cost is still really high. So basically, these large operators in Texas running at 6 to 8 cents on mining Bitcoin. So they should be somewhere around like 4 in order to survive, or even below. So let's see what we go on. But the network compensates itself as well. So when it becomes not profitable for you, you start switching off because you are not making money. You are losing money on a daily basis, paying your electricity bill, your people, and then the hash rate is dropping, the difficulty is dropping of the network. So you start making more on your share. So you need to be very competitive on like operational costs and in order to survive. It's a hedge against the risk in mining.
Okay, thank you very much. Ekaterina, please.
I like difficult questions. So you said, JC, that 51% is not possible, yeah, in one hands, like to control Bitcoin. But how about market manipulation? Does it exist in Bitcoin trading when? And how easy it's because it's still not very diversified. 1% of population aware about it, and how easy it's manipulated. And second question, regulation. Do you see any risk that regulators will just say we don't want any more Bitcoin? And just what is the plan B?
51% is possible. It's just it doesn't really affect us. I mean, it would create a fork on the network, do something else. Now, 51% will be required to fake a transaction on the blockchain that would be approved by 51%. But eventually, if the other miners don't accept it, like it's theoretical, won't really affect it, and the amount of collusion that needs to take place is almost impossible. Market manipulation, yes, it's happening right now. Bitcoin is a strictly supply and demand very soon, and we're hoping this with the ETFs. And I mean, the predictions are all completely wrong. All of us have no freaking clue whatsoever. We were saying, you know what? It should be 50,000 by the end of this week. Most of the maxis that are good friends of mine were claiming $1 million within the next 2 months. We went down. We're at 30-something now. So yeah, I'm crying, but it's not the point. But this is part of the market manipulation. Market manipulation exists because a lot of Bitcoin holders, and it is a true supply and demand. The price goes up as the supply goes down, people are willing to pay more, it goes up. And because there's a fixed amount of coins, and we know exactly how much liquidity there is in the exchanges at any time, we know how much big accounts, which we really don't know who's owning them, we have an idea, you can point, but they move them into the exchanges. So once they move, because we see the transactions, the blockchain is transparent, we can see this wallet is moving 1,000 Bitcoins into the exchange. You know that's immediately signal that they're going to liquidate those 1,000. So they're going to increase the amount of Bitcoins. And as supply increases, like anything you buy, it's winter right now, try to buy snow. No one's going to buy it from you because it's cold outside. So the supply goes up, price goes down. So right now, there's a lot of market manipulation. I mean, we're market makers sponsored, which focus on this, right? But there's tons of market manipulation. Now, the big thing is this, that there's only 21 million coins, and there will only be 21 million coins. And all of you that do not own one Bitcoin right now, within the next 2 years, you're going to be completely shut out from the opportunity to own your own Bitcoin. Guaranteed. I write that on stone, because as the adoption goes, that ETF are now adopted. As more rich people say, you know what, I want to own one Bitcoin, because it's like buying land in Manhattan in 1800s that you could buy for nothing and it's worth hundreds of millions now. There's only so much land in Manhattan. It's a tiny little place. There's only 21 million Bitcoins. I'm lucky. I bought early. I kept. I have Bitcoin. Vineet could be right, could be wrong. I don't have all my assets in Bitcoin, but I know that that asset has already made me enough money for me to live happily. So the advice globally is at least own 0.1 Bitcoin for yourself, for your children, for the rest of your family. It'd be the best thing you'll ever do, because we're at a time that it's an instant that's happening right now. It's like if you go back to your grandparents being able to buy land in Switzerland for $1,000, well, that's the opportunity you have right now.
Guys, how many of you are very happy with the ETF launching? Okay, some of you are very happy. Just to tell you, ETF means that you don't own your Bitcoin anymore.
All right.
Thanks. A lot of them understood. So please own your own Bitcoin. ETFs are good. They will get a lot of money into the system. We'll all become rich. The normies will get, the pigs will get slaughtered. But please understand, because yesterday at a panel, people were bashing centralized exchanges. I said, I hope you understand what an ETF means. It means a centralized exchange. They said it's more regulated. I said the exchanges were also regulated in the Bahamas and the XYZ of the world. So ETFs are good. They will get a lot of normie money, but it just leads to you not owning your Bitcoin. I had a post on it. People hated it.
Let me close this round. I think it was a great contribution from your side. I would really thank you. I would love to have Millet here, of course, like everybody who is a libertarian, but I don't know what his opinion on Bitcoin is. He in love in US dollar, I heard. Or that's what it is. What do you hear?
If you look at the history, what happened to us when we adopted Bitcoin in El Salvador, right? I mean, we still, our president just released about a month ago. Okay, where is all the naysayer now saying about El Salvador that we're in positive cash flow, that we made $40 million from our Bitcoin investments? They're all quiet. So a lot of government people, and it's risky if I put my regulator hat on, yeah, it's risky. Don't switch to that, right? So I can see it from that side. So El Salvador had a very unique opportunity. I think it'd be a long time before you see another El Salvador, because one, we have an incredible president that he has 92% support of the country for a reason. The guy says, I'm doing this, and it gets done. You're not going to have another leader like that in a long time. Two, he controls, the people believe enough in him that Congress is actually controlled by the president. So if he says we're going left, we're going left. Argentina is a much different country, has a lot of rich families, a diverse governmental policy that, yeah, the president would want to go left, but he's going to do what needs to be done in order to keep the country stable. Okay. And so it'll be a long time before we see another El Salvador.
Fantastic. Thank you very much for your contribution.